Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we're here on January the 23rd, 2020 for a Forex market breakdown for you. We're going to take a look at the major foreign currency crosses and see what kind of trading opportunities we have setting up today on this Thursday as we're starting to head into the remaining end of the week. But before we get into it, we want to get to our disclaimer real quick, just to remind you that this video is for illustrative purposes only. Alright, and now we are on our live screen here at www.forex-trading-unlocked.com on our workstation page. The numbers today and tomorrow are really, we do have for the Japanese yen the CPI number. We had CPI for the Australia, and then we have tomorrow, we do have, let's see, what was it? Oh yeah, we do have the manufacturing PMI for the U.S. as well as the market PMI services also. So we do have an economic number for the U.S. dollar for Friday, and then today we do have the Japanese yen still to be impacted. And then otherwise we don't have anything until next week, so we're not going to even bother with that. All right, first of all, we have the dollar index chart pulled up here for you. So as you can see, we have a critical resistance level up at 98.445. The market is trading well below that still. We are trading right now currently in the upside corrective target zone. So if this current rally that's been going on since the beginning of January is just a corrective move higher, then we should be right around at the upper boundaries of that move. Does that mean that we're not going to press on higher and the dollar is going to stop being a bull? Absolutely not. Just technically we have hit the targets. We're also coming into this downward sloping resistance, as you can see. So we're right there. Now we're going sideways through it. A lot of this could be because of the impending impeachment trial that's going on in the U.S., so that's going to affect the U.S. dollar versus everything pretty much for a little bit until that's over, especially as the world tries to figure out what does it mean. But we have a critical level here, this upside breakout pivot at 97.825. So that's that last swing move, lower move high right here. A breach of that level would indicate a neutral to higher bias for the dollar index and mean that most likely that this current rally that we have now, even if it is a correction, is going to press this correction even further and make a run for this last swing lower move high that is part of the major trend right now lower. Now this is a pretty gradual trend steeping lower. It's not a radical sell-off for the dollar, so for it to go sideways now and get rejected and fall back on support, that would just fit right back into the trend. But let's see what this means for the dollar. So right now it was lower the past few days, but not very much. Today it is higher, gaining ground back against most of the other currencies around the globe. So let's jump into that and see where we're at. So we're going to start out with the Euro US dollar and see what's going on here. So we have the dollar index, which is slightly higher today, and now we have the Euro US dollar, which is just pulled up here. And this is interesting because whereas the dollar index seems to be running into resistance, maybe the bull will keep on going, we don't know. If the dollar index turns, that would be good for currencies like the euro and the pound and what have you. But we have an interesting situation that's going on in the Euro US dollar that may now start to cause some divergence. There's that big word, divergence, that when that happens, usually that sets up some good trading opportunities. So let's see what we have going on here. We have the Euro US dollar that has had a head and shoulders formation. If you see this yellow support line right here, this is our neckline that we had been trading through and bobbling around, and today, as you can see, we have fallen down into our critical support zone here. This took out the upward sloping blue line, as you can see, that set the trend in the beginning of October for this bullish market. Now it's been in a nice slope so far. This failure today, this is where we start to run into some questions as to what's going to go on with the Euro US dollar. Now the euro may be strong for various reasons, it may be weak for various reasons, but I think the main fundamental factor that's hurting the euro now is the Italian issue that's affecting the EU. You got to remember we have Brexit that is coming up next week. So let's put this into perspective. So next week we have the Brexit line here. So let's move this so this makes a little more clarity. Okay, so this dark line here on January 31st, this is the beginning stage of the UK leaving the EU. It's a big deal. So, especially because now we have some woes with Italy, and obviously it's going to impact the debt market and probably impact what the ECB is going to do now over the next couple months to maybe even year. And then you got to realize that the UK, they're leaving on the 31st. The ECB, or not the ECB, the Royal Bank of England the Bank of England, excuse me, already announced that they're not going to do anything this month, and they meet at the end of the month next week, and they've already said ahead of time preemptively that they are not going to be doing anything. So that means that we already have one stable thing we can count on that's going on in the European trading zone. So that's going to mean that we're going to probably start to see a split between the pound and the euro, not just because of Brexit, but because of what's going on with the EU. Because as the UK is leaving the EU, there are some woes that now the EU is going to have to absorb without the help of the UK, obviously. Besides deal with the trading issues that they have to haggle out by the December deadline. So we have the market trading right now into this critical support zone. You can see it's trading at $1.1045 right in the heart of it. Could we go lower? It's very possible that we could trend lower into tomorrow, into Friday. However, this is a substantial sell-off today. It's the biggest volatile day we've had, except for last week when we had this one down break. Pretty much for the past month, there's only been 1, 2, 3, 4, 5 trading days in 3 weeks that have had that kind of volatility. Otherwise, it seizes up. Like yesterday, we only had, a high of 98. We had a 28 pip range. That's very, very tight. And now even today's range, here's something you have to take into consideration. The low is $1.1036, and the high is $1.1087. So that's 51 pips. Not the biggest range for pounding new lows and taking out this key support that's been holding the trend intact. So the fact that this support zone comes right below our upward sloping support channel may mean that we are going to find a higher move low now and then start to regain our trend. So don't get overzealous on this sell-off here. However, right now the current trend obviously is lower. We have hit critical support. And the thing you have to watch out for now is, do we continue to hit support? So I'd be very careful. If you're a bear, I would say just keep working it and keep your stops tight. I would key off of today's high as a risk level for a potential turnaround, because where we're at here also, we could settle into a very big sideways trade. So we could start to bottom out in this critical support zone here between $1.1016 and $1.1059, these two green lines right here. Bottom out, head into Brexit, go sideways. See, that's the thing is, you already know that next week there would be a tightening of volatility, most likely going into next week's trade, because we have only sessions before Brexit. Today's the 23rd. We have 8 days until this happens. Most likely, just like when you have major central bank meetings, when you have a big event like this, volatility tends to drop and the markets dry up before the event happens. So I think that even though we're trending into this date, that we're probably going to see it going into tomorrow and definitely into the following week, that this market's going to start to tighten up again. We may have ranges just like we had yesterday and the day before, where we have only like 30 to 40 pip ranges as the extreme. So be very careful in your expectations for movement in this market. However, right now we do have a very aggressive sell formation that's formed. We have the head and shoulders. We have a confirmation breaking into this target zone. Now the question is the next, if there is a rally, is that just a rally to sell for the next wave lower, or is this the beginning of a bottom here to resume our uptrend, and then have this market going back for a challenge of where this head was for this head and shoulders? So even though we've had a nice sell-off here, your expectations, I think, should be very rational, because as far as targeting very much lower, I think that if we have the fundamental, like I said, from Italy, if it starts to really become a topic of the news and headline news, then yes, I think this bearish trend will continue, and you'll see the euro US dollar get hammered down, probably down towards this 109.5 back to 109 area. But If we don't hear too much of that and it's just Brexit and we get through next week, then expect sideways to higher trading over the next week, because we're probably going to start to set a base and then not necessarily become a bull, but go sideways in this range from about basically where we're at trading right now back up to about a 111.5 up to $1.12 even. So we'll see how that manifests, and since we brought up the pound, let's go segue into that market. So we have this market that is winding its coil going into Brexit. So we have the date marked there. As you can see, yesterday we had a nice higher move high. We broke out to the upside a little bit as far as breaking out would, if you want to call it that, because as a whole this market's been going sideways now for the month of January. Remember that the currencies, the dollar was under pressure all the way up until the end of 2019. The month of January as a whole, the dollar has gained strength against most of the markets that look at or have looked at so far today. Even now the pound is the one where it gained strength, but then it kind of wobbled. If you look at it overall on the course of the month, the pound is really not down that much versus the dollar. So that's kind of a big deal. It means really it's unchanged. The pound is one of the biggest weights in the dollar index, so that's also one of the biggest weights against the dollar as far as where the globe goes to buy or sell currencies. So being sideways, that starts to tell you that a big part of the market is on the sidelines. That's a lot of cash that right now is starting to really just wait until the 31st. So your expectations for a pound trader, I think if you're a range trader, you're going to have a lot of good opportunities, just like what we've been calling for the past few weeks. And I think you're going to really have to wait another few sessions. You already know that the Bank of England is not going to do a thing next week. That in itself is a big deal. So now they're waiting on Brexit. So if you already know the central bank is not a variable, this is all Brexit related now as far as the drying up of the trade. So today's Thursday, the market's really tight. We have other markets that were hanging on the lows, and as we'll get to them, or the highs. And now here's this one that is one of the biggest currencies against the dollar, and it's going nowhere. Of course, Brexit, the biggest currency that's affected, obviously, is the British pound. And we'll see how it is. But no matter what the dollar is doing right now, you can see that the dollar index, strong or weak, for the most part, really has not been impacting the pound whatsoever, or vice versa. So now let's look at the US dollar Swiss and see what's going on there. Okay, this one has been in the downside bear trend for quite some time. As you can see, the high of yesterday, this is going to be our upside breakout pivot at 97.28, and the low from a few sessions back at 96.13 is going to be our down breakout point. As a whole, we're looking for this market to be a bear. We're looking at it right now to be only in a corrective rally right now. And as far as where it's going to go, I would say chase the dollar index, because it seems that when the dollar index is weak, the Swiss is very strong. When the dollar index is strong, then the Swiss is weak. Overall, the trend against the dollar, though, with the Swiss is lower. The dollar is weak no matter what right now. It seems that the Swiss is an aggressive bull against all the major currencies. So I think that right now all you have is a profit-taking move right now. It's not that big of a bounce that's going on, and even if we get a rally, we could get up to this area here, this 98.65 down to 98.20 area, these green lines right here. This would be our upside target range that you could easily see the US dollar Swiss correct back up to before it turns back to become a bear again. So this market's been aggressively selling off for a while, and the Swiss has really been, like I said, a raging bull against most currencies. So it's very likely that you have some of your longer term bulls that are just taking some profit right now and waiting to absorb the Brexit, and if you what have you, kind of just sitting on the sidelines before they start to begin the next wave of buying, because I don't think that whatever is driving this current bull with the Swiss franc is going to stop anytime soon. I think we're actually at just the beginning stages of it. But time will tell. The monthly charts will be our big indicator, especially come the summertime. Now let's look at the US dollar, Japanese yen, and see how this is shaping up. Now this market's been riding below new move highs recently, and look at the sell-off it had today. I'm telling you that this is kind of crazy. The US dollar index, it is strong, and where is it showing strength? Not here. How is that possible? It makes absolutely no sense that the U.S. dollar, Japanese yen is selling off like this. I think for the most part, though, the reason is this is probably more Corona related, perhaps, because it just doesn't seem right that while the dollar index is holding up pretty strong right now, that it is falling apart, that the dollar is falling apart versus the Japanese yen. So we'll see how it goes. Right now it's bounced. Today's low, as you can see, is bounced right above this 109.28 key support area. It's trading above that right now. It's the end of the trading session for Europe. It's already closed. Asia's closed. So it's just the U.S. that's going on right now. We're midway through the day. Probably not much more volatility left for the currencies today. You're probably seeing pretty much most of the trade already occur. If this is support where it bounced today, then we might see a bounce really quickly back over the next couple days, back up towards these highs at $1.1029. The overall trend is bullish. You can see how this market does sell off very violently and then is either quick to base or quick to turn around and go back up towards resistance. Overall, this market is a bull, so I'm not quite sure why the US dollar is selling off versus the yen right now. I think it's probably more profit taking than anything else, because fundamentally, except for the coronavirus that's going on in China and Asia, I can't see why we would be correcting down there. But to find support down at this 108.65 to 108.97 area is very likely. And then I think if you do get a correction that continues down into this lower area, which is very probable, that's probably going to be the extent of it. If it goes below that, we still have this upward sloping trend line that's maintained, that's kept the trend intact. A failure there then probably means that this bull that has been going on for quite some time, maybe not necessarily becoming bearish, but maybe becoming neutral. And we'll see how that goes, because for some reason, no matter what the dollar index has been doing, the US dollar has been maintaining strength against the yen. So we'll see how this trade setup goes. Right now it's coming off of higher move highs, and it's not that far away, and it's hovering above some key support right now that had been major resistance for a long time. So as what was once major resistance now becomes support. Let's see how it behaves over the next couple days, but still don't be surprised if you get a dip down into this critical support zone. Now let's see what's going on in the other Asian currency markets. We have the Australian dollar, US dollar here that is, well, it's just coming right down to this key rising support line that's been holding the trend intact. Unless we get a failure down here of this last major higher move low at 67.53, I think you have to kind of just ride this wave out. The bears are in control. I wouldn't be too aggressive of a buyer right now, but it is in a very good support area. The key is that if we were to get a rally above 69.34 here and take out this swing high, that would definitely reconfirm that our bullish trend is intact, making this a higher swing low and giving us a lot of reasons to keep the bullish stance for the Australian dollar versus the dollar into the short-term future. The question is, we'll have to watch the dollar index on that one. Today the dollar index is slightly higher. Perhaps that's why we're getting this rally going on right now in the Australian dollar, US dollar. So we'll have to watch out for that. Right now, like I said, we don't have any trade setups. You really can't get bullish until we take out this swing high right now. As far as being bearish, it's tough because we're selling into some very strong support. So I'd wait for a signal. I'd either wait for a valid buy signal, or if you're, like I said, if you're already short, keep on working it. And I would definitely use this last 69.34 high as your risk level. Any trading above that definitely reverses gears for the bears for sure. I think you're going to be in a world of pain if you try and be short above that. So that being said, let's take a look at this low right here. Like I said, we're riding this support. As you go back, you can see it's been an area where the market has pretty much been bobbling around as a pivot level. So it may be dancing around this area for the next couple sessions. This also could be impacted because of the China coronavirus that's going on. We don't know yet exactly right now. It seems to be pretty much under control, but maybe that's one of the reasons why the trend is stopping here and finding support and not really going anywhere. We'll have to see how it manifests over the next few sessions and how it ends the week tomorrow, especially. Maybe we get a signal. Now we're going to take a look at the New Zealand dollar, US dollar, and look at this. This is interesting. This one has been kind of basing. It's been going sideways now for a week and a half. It trended lower, obviously, for the past since the beginning of the year, but overall it's in a bull trend, and it's kind of odd. Like, I was looking for a swing trade to emerge. Right now it seems to be floating on support. I would watch the dollar index. I think since it's higher, that right now this is going to stay under pressure for a little bit, but for the most part you're found, I think, pretty much a base, and I'm looking for a breach, a nice rally back up to challenge this last swing high right here. Now this, right now, as fundamentals go, we have the market where it has made a higher move low, then a lower move high, and then a lower move low. So right now, technically, we have a neutral to lower expectation for the trend. But if you look at the longer term trend, we are coming off a higher move high and establishing still a higher move low, potentially. Only a failure from 65.53, or for sure from the 65.22, takes us off the upward trend campaign, which then puts us for sure at a neutral to bearish posture for the short term future. But right now, like I said, we're looking for a basing, and right now we don't have a reason to buy it. We don't have a reason to sell it. And you can see how volatility is tightened up. It's a range trader's delight, swing trader's nightmare. I would really wait for a sign before you start to engage any type of swing trade or trend trade. Unless you're an aggressive bear or bull, then I would say you can risk against this upward sloping support line somewhere into this support band here between 65.53 and 65.22. And definitely, if we do get a pop back above 66.65, I think we'll be looking to challenge the higher move high that was set at the end of the year. So we'll see how that manifests. Now let's come over to North America and see what's going on with the US Canadian dollar. And this market, wow, it took out nice highs yesterday, and today it continued to go higher as well, but it's running out of gas. This is one of the markets that's helped to fuel the dollar index turnaround today. And it just, yeah, look at what happened. It came into our critical resistance zone. The trend right now for sure is obviously bullish short term, but like I said, this is where we start to run into problems before when it comes to the dollar index. If the dollar is strong, then yes, I think this critical resistance zone can get pressed. We may even get a blast all the way up towards this downward sloping resistance line that's keeping the longer term trend intact. I mean, anything can happen. However, if the dollar index and the dollar is starting to run out of gas, if this is just pushing the curve, then we've hit a perfect target area for this market to turn. And as you can see, there was consolidation here and here before. So we might see a sideways trade emerge here before it continues lower. The overall trend lower is not a very sharp slope, so that's this gradual sloping trend lower. It's easy just to kind of waddle its way lower, where it just has these little nice corrections. It looks like it wants to get stronger. It looks like it's bottoming, because in the longer scope, you can see, like, overall the trend, if we stretch this out, it's lower, but it seems like it's kind of trying to bottom. Maybe it is. Eventually it will find a bottom. But I wouldn't get caught up in that right now, because especially if the US dollar index does turn, then I think you're going to see this market collapse. Right now, this seems that this market's getting most of its support from the fact that the US dollar has been in a corrective rally since the beginning of January. If this is just a corrective rally, how long will it go? I don't know, but we are in the third week of it. It may start to run out of gas over the next week or so. We'll see how it manifests. Now, we do have some interesting trading situations setting up in the US dollar Mexican peso. This market has been trending lower aggressively for the past couple weeks. And when I tell you, you don't want to try and catch a falling knife, but interestingly enough, we have had a short-term buy signal occur today, just above this key pivot level down at the 1853.49 here. That's this caramel line down here. We today took out on a swing basis, on more of an intraday basis, a higher move high after establishing a higher move low. Or excuse me, we made a lower move high, made a higher move low, and now we've made a higher move high. The volatility is definitely there from the past few sessions. This week overall has been a swing trader's delight if you're an intraday trader. Day traders or a daily trader or longer term trader is probably a little bit rough. But if this is a signal, true buy signal here, and it holds, and we're going to use this low from a few sessions back as our risk level, that's at excuse me, 18.649. Yeah, so basically 18.64 pesos to the dollar. If this base is correct and our risk is good here, then we have a nice buying opportunity for a rally up to this upside correction target zone, which comes right into the upwards or downward sloping resistance line, holding the trend intact, which would give us an upside target of 1926 to 1915 pesos. So that would be a nice little rally that could probably take, I would say, most likely a week and a half, maybe 2 weeks to manifest. I don't think this is something that even with, unless we have days like today consecutively, it would still take, I would say, a week and a half to get there. But that would be a nice corrective area before the market either stabilizes or it begins its next wave lower. This market is looking weak. You do not want to typically trade against the trend, but right now it seems like we have a valid buy signal. So if you're an aggressive bull, short-term opportunities are here. I would keep it tight. Remember, you don't want to be long above this 1864 low bottom from the few sessions back. That being said, if you're an aggressive bear, if you're already in it, then be cautious. Maybe you want to take some profits and wait for a reason to sell later, or at least take off part of your position and then, you know, scale back in as the market gives you a better chance for another selling there opportunity. So right now, that's the question: is the U.S. dollar Mexican peso a raging bear or trying to find a base? I don't know. We'll figure it out. We'll see what happens. This is one nice trade, though, I think, that is starting to manifest, and we will definitely be watching it as it does. So let's look at the U.S. dollar Turkish lira. Here's a question. Here's a currency that we don't always look at, but there's been a lot of interest, and also it's got some interesting trading opportunities. This market is an overall bull and has been since the summertime. This one has been leading the currencies as far as the dollar being strong against certain currencies, just like it is against the yen. Continues to go. Now the question here is this trend intact and is it going to remain solid? Now we are coming off higher move highs recently that were set at the beginning of the year. And then we broke down into it, and we've been rallying nicely over the past week. Now we touched down right at the top of our major support zone. This is at 583, 552 to 580 even, basically. This little green, this little support band right here. So we bounced right above here. This is key support. And now we have a nice strong little momentum going even today. So it looks like we want to make a challenge of this high here at 5 liras to 5.9852 liras to the dollar. So this would be interesting to see how this manifests. I think the bull is going to continue. It looks like right now that it's ready to press through this resistance, at least come back up here. You might see some consolidation, but overall, I think that this is a market that, you know, we missed this buy zone. Now, if it was to come back and fall back on the support line, it may still do that. The bears may bring it back down. Maybe it's the beginning. Maybe this is a selling opportunity where it's at right here. So, but right now, it's interesting how this came upon here, the support level, and held really well and bounced very strong. So we'll be keep watching this as we might have a potential swing trade. For sure, if we fall back on support and take this out at this 5.8372 area, I think we'll be laying on this upward sloping support line. It's been keeping the trend intact for sure, but if we fail here, then it sets up for a nice little sell trade because the overall trend, as you can see, has been higher for months. So maybe we have a topping situation that's happened here where this is the top. This is our first higher swing low. Then we have a lower swing move high, and then if we take that out, there we go. There's the fundamental technical that gives us an idea of trend direction. And we always want to try and trade with the trend, trade the action, not the reaction unless you have a valid setup. So that's what we're looking for, and right now these are some good trading opportunities that are manifesting. So these are some of your lesser crosses, the peso and the Turkish lira, but they're definitely ones to take a look at and keep in mind. But we want to back to the euro US dollar once again to see how the dollar is shaping up. You know, it's a little bit higher today, but not much. And this one, just like we said, it's probably done for the day. So right there, we're in the heart of the target zone. It's bottomed right here in the middle, right in the heart of it. So did it Did it set a bottom today, a short-term low? I don't know. It definitely came to our target. So we have reached from, as far as from this slide right here, we had already hit our short-term targets, and now we've manifested our longer-term targets. Now, we had a sell signal up here when this head was formed, and now over the past few sessions, we've manifested a whole head and shoulders. Now, that is an overly, now a head and shoulders is a bearish pattern. Typically, that means longer-term trending type of scenario. We could right now be where we start to set a little bit of a bottom consolidation, get a little rally going, and that might be a rally to sell. So the next rally may not be keeping this trend intact. It may be the beginning of a corrective wave higher before we have the next major wave lower. So this head and shoulders, if you really look at what's the distance that we could go as far as hitting support, that would have us back down at this 109 area, 108 half area. So remember the fundamental that we talked about at the beginning of the video. Keep in mind what's going on with Italy. This is big news. We know that the Brexit, this is the black line here, the 31st, that's unavoidable. That's happening for sure. It's already factored into the market. We were more set up to go sideways going into Brexit than to press new lows like we're doing today. Today, I think, is more fallout because of what's going on with Italy. And then we also had the potential of the new trade war between the United States and the EU as far as tariffs and things like that. It's already been set in motion and set by the U.S. president. Ultimatum already was put to them. You're making a deal. Something's happening. Otherwise, there is going to be tariffs put in place. This is happening. This will affect the EU. You have the UK that's leaving, that will not be helping to absorb this totally. It's going to be an indifference of geopolitical factors that are going to be going on. That also keeps the Swiss bull intact. Remember that. The Swiss is going to be a trend that it may be just the very beginning stages of a major rally, especially if the euro-US dollar starts to really hammer support down below 108.5. If we start going towards parity with the dollar this may be the first time in a long time that the euro-US dollar could head towards parity, and we may actually be at a discount again and see prices where we haven't seen the euro versus the dollar in a very, very long time. So, but that doesn't mean necessarily that's because of dollar strength. That would mean dollar strength versus the euro. So I think we're going to have divergence of currencies. So you may see, come Brexit, the pound versus the dollar, you're going to see a big rally in the pound and continue to trend higher. And then with the euro-US dollar, you're going to see the euro start to trend lower. So we will see how this manifests, and it will be very interesting. But I believe that we have some very nice swing trading opportunities and longer-term trend opportunities coming up in some of our major currency crosses as we get through the end of January and we close out the first month of the trading year. We will have crossed the Brexit deadline too, which then takes that off the table, because at that point it only becomes an issue of the December deadline for the trade rules and whatever, which I'm pretty sure with the state that the EU is in, especially if they have to deal with the United States on tariff laws, that all of a sudden they're going to be like, okay, we're fighting a war on two fronts, and we all know from Machiavelli and Sun Tzu, fighting a war on two fronts is a war you just cannot win, typically. So my predictions on that long term will be a topic for another video. With that being said, I want to thank you for your time. Please always check us out at www.forex-trading-unlocked.com and subscribe to us on YouTube so you can get our videos whenever we come out and stream. You'll know when we're live. Otherwise, you'll be able to get notified to watch our lessons and videos and catch up on your own time. And with that being said, stick to a trading plan. Always have good money management rules, and we look forward to having you back on